Hi, it's Wayne from truthaboutmortgagerates.com here with an update from the crazy mortgage market. Well, we finally saw rates move down this week. Last week we saw them move back up with all the hedge funds selling, mutual funds selling, basically selling everything, stocks, bonds, driving mortgage bond prices lower, stock prices lower. Again, as we know, when mortgage bond prices move lower, rates move higher. In the face of all of this bad economic news, typically we don't see rates move higher, but we're not in typical times. Really, we're in a bit of a crazy time. Again, check out our report, truthaboutmortgagerates.com. We'll mention a little bit more about it, but that gives you all the basics, a lot of in-depth information as to what really goes into what's happening in the mortgage market. Now, again, as I said, we finally saw a break in mortgage rates this week as investors finally came back, started buying mortgage-backed securities again after all the selling got out of the way, drove prices down, and realized that mortgage bonds were pretty attractive to investors. Came flooding back in this week, drove rates down considerably in a very short period of time, so now we're bringing rates down back around 6%. And really, with all of the bad economic news, we typically expect to see rates moving lower. And that's what I really think we will see happen, but we've got a lot of other things going on, which we'll talk about in some later videos. But for right now, the economic news, not very good. Jobs report today, typically we'd be looking at it as jobs being, how many jobs were created. Now it's how many jobs are being lost. And this month we lost 240,000 jobs. Well, it's October, the month we're talking about. October we lost 240,000 jobs. And in September, initially we had the number at 159,000 losses, was revised up to 284,000. A massive move. It shows that really our economy is bleeding jobs like crazy. Typically all that means is lower long-term interest rates, because that's cutting into inflation, cutting into growth, and it is doing that. Some of that effect is not translating to mortgage rates, and we'll talk about more in depth about that in future videos. For right now, rates have moved down. We do expect them to continue to move in an overall sense, but we'll see some profit taking today, and which bumped rates back up just a little bit, but that's expected since we had such a huge move over this past week. Now, a couple of things you want to look out for, stuff that's been out in the news lately in what it means to mortgage rates is, number one, our Federal Reserve, along with central banks in other countries, have been cutting short-term rates, and some quite aggressively. And most people believe that, gee, okay, they're cutting rates, or the rate, and that means rates are coming down overall. And we know that's not true. The Fed and other central banks, they control short-term rates, not long-term rates. Mortgage rates are tied to long-term. So, and you do want to check out our report. Again, truthaboutmortgagerates.com. Click the link. You can go check out that, it's still free, and it tells you all about what goes into mortgage rates. But the one mortgage program that typically is going to be affected by short-term rates coming down are home equity lines of credit. Now, if you still have one, as many banks have cut them off or stopped allowing people to take any draws, or you it ends up kind of being finished and all you can do is deal with what you owe currently, they're typically tied to prime rate, which the prime rate is tied to the Fed funds rate, which is what, again, the Fed controls. So that has been moved down aggressively, and if you have a home equity line of credit, chances are you're paying a pretty low rate at this point in time. This number two thing you want to take a look at is, in the media, when they're reporting on what's happening with mortgage rates, they're typically reporting based on a survey that is 1 to 2 weeks old. Now, frankly, that information is useless when it's 1 to 2 weeks old. Especially the way we're looking at now, the volatility we've been seeing, rates moving up and down quite aggressively. Again, 1 to 2 weeks old, you might as well be talking about something that's 50 years ago because it has no bearing on what's happening now. But even the business channels will be talking about that survey and how that's moving it. And frankly, it's so misleading, it's a waste. It really irritates me when I see them talking about it, because it's misleading to the customers and misleading to the public out there. That's it for today. Till next time, Wayne from truthaboutmortgagerates.com. Again, check it out, truthaboutmortgagerates.com. See you next time.